Welcome to Beyond the Risk, the podcast where Westfield specialty leaders break down current specialty insurance markets trends, challenges, and solutions, and what they mean for your business decisions every day.
Hi, I'm April Brackett, Senior Vice President, Head of Marketing and Communications for Westfield Specialty. Welcome to Beyond the Risk, a new podcast from Westfield Specialty. During this podcast, we'll dig into emerging risks, evolving liabilities in more traditional areas, and how specialty coverage is being used to solve real exposures businesses face. Today, we'll be discussing the evolution of cyber coverage and why the focus has shifted from reactive protection to proactive strategies. Cyber risk has always been a moving target. But what's changed is the speed and sophistication of attacks. In today's environment, businesses need active monitoring, real-time threat intelligence, and incident response collaborations built into their relationship. We'll discuss how cyber coverage is evolving, why proactive measures matter more now than ever, and what brokers and insureds should be thinking about as these exposures continue to grow. And with that, let's bring in our guests, Jeff Kulikowski, EVP Cyber E&O, and Christine Dickenson, VP Cyber E&O. Jeff, Christine, thank you for joining me today.
Thank you.
Thank you for having us.
My pleasure. So, Christine, I'll start with you. Cyber incidents are often described as high frequency and high severity. From your perspective, what makes them uniquely challenging compared to other specialty risks?
Yeah, so I think the biggest thing about our risks is that our attack vectors and the landscape of the cyber market is constantly changing. We don't know where the next attack's going to come from. We don't know what the new threat landscape could be tomorrow. And I think that there's a big difference between the cyber market and how other specialty lines of coverage can analyze and look forward to claims trends. So the property market, for example, they have a vast amount of statistical data from history that can help them predict future trends or see things like weather patterns or engineering services that help them then adapt their underwriting methodology or their strategy. We don't have that yet to that extent. And I think that's a pretty key differentiator between the cyber market and other specialty lines of coverage.
To your point, it's going to be hard to develop that too, because by the time a bad actor zeroes in on one tactic and uses it 1 year, year and a half, you figure out a solution to it. Instead of being able to look at loss history and historical loss precedents to shape the future of the risk, we're really having to play more guesswork and utilize experts in network security, engineering, and other things to help predict what it will be, and then situate our policies and coverage to that.
Yeah, and in many cases, it always feels like the threat actors are one step ahead of us while we're trying to do all these things Jeff just mentioned. It's you feel sometimes like you can't quite catch up to what they're doing because it'll change in the drop of a hat.
Yeah, got it. So a little bit on our heels and being able to pivot and react. How long has the cyber market been around? I mean, you mentioned there's not a lot of historical data, and yes, it's constantly evolving. So capturing that historical data is a challenge. But how long has the cyber market been out?
I would say in a meaningful way, probably about 25 years. You could argue earlier on, there was some instances of coverage. It was likely via endorsement, probably an indemnity-only third-party situation, not as broad as what we have now. In general, it was pretty slim coverage early on, and I would say in a meaningful material way that we think of the market now has been approximately 25 years.
I agree. It's been about 25 years since you've seen monoline policies start to be more of a presence than a rider in a property policy or a carve back in a third-party professional liability policy. So, yeah.
And at what point does a cyber event move from being like a manageable IT issue to full-scale insurance claim?
There's no guidebook for this, to be very honest. You can develop business continuity plans around it, but it's all about collaboration and communication. The IT department of our insured needs to know that they don't have to wait till the last minute to be able to say, hey, we should engage the insurance carrier for this. The earlier, the better. And unlike other lines, say, your automobile insurance. So I'm sure anybody who's listening to this has reported a claim that didn't hit their deductible on their auto policy and been penalized for it come time for renewal. That's not how cyber coverage works. If anything, the more frequency of reporting that we see with our insureds helps us know, A, they know when to pull the kind of emergency cord, but more so, B, they're keeping us involved in their own ecosystem and we're able to help them when they're ready.
And one more thing to that, anytime I get asked this question, the first thing I think of is when the insured doesn't know it's happening, right? So an IT event at an insured's operations can actually be very manageable, right? If there is effective proactive measures in place to detect and then put the proper remediation steps in place, you can actually control it with limited to no damage. It's when we have instances where, unfortunately, we've seen threat actors be in an insured's network for days, weeks, months, and that creates a massive amount of time for some serious damage to happen. Because of that, you then see costs go up as we have to determine how did they get in there? What did they do? Did they exfiltrate data? Are they still in there? Did they corrupt anything? And so that at that point, you're past an IT event. You are in probably a full-blown claim.
And are those the type of events that exhaust limits? I mean,
they definitely can. Yeah, I think that all depends on, I think every claim is unique in their own way, but if we're talking about exhausting policy limits, I think in the earlier days of cyber, you would see policy limits be exhausted predominantly by privacy breaches, where the data was the gold mine, right? The bad actors wanted data. So you saw policy limits be exhausted because they went after places like financial institutions, healthcare, and retailers. That took a shift about 6 or 7 years ago, would you say, Jeff, where ransomware became the biggest threat. And while data is still a factor of that, the claims that started to exhaust policy limits were ransom extortion demands in the tens of millions alone, then the subsequent business interruption, any sort of data exfiltration, the costs associated with that. Most notably, probably though, the business interruption is what we're seeing exhaust the policy limits. If you think of any types of operations of manufacturing, supply chain, things like that, if they can't operate fully, it is instantly going to start hitting their tower and causing some damage.
And if I can add to that, one of the most unique parts about cyber claims, I think I mentioned before, there's really not a playbook. We have a playbook for how to respond to an incident. We understand that part. But what we've seen in our experience is that it's not just an insured's industry or revenue band or geography that can complicate the claim. It could be the particular IT system that they use. It could be their network operating model. It could be a multitude of things. So the insurance carriers and that network of vendors that we employ to assist our insureds in guiding through these events, that's always going to be there, but we have to be on the ready and be able to adjust to, ooh, this looks like more of a business interruption event, or, ooh, wow, this is really more fraudulent payments. So we need to engage this. So all this loss experience, which doesn't necessarily help us predict where the claims are going to come, but it certainly helps us prepare our insureds for situations that we've seen. And it just allows us to be able to tactfully address what their immediate issues are while keeping an eye on like what may come because of XYZ and whatever complicating factor it may be.
So Jeff, we've talked about how cyber is different from some of the other traditional lines. What's different for the broker?
A lot. Its collaboration is absolutely key with these claims, and our brokers are really the first point of contact in this claims process beyond like an immediate ransomware threat type nature thing. So what I mean by that is our brokers have the exact same experience that we do in guiding clients through this. And as the insured's intermediary, their focal point about how to communicate with the carriers, their experience and frankly, their involvement, we think is a huge factor in the insured's benefit. Without the broker being able to guide them through the process, without them being able to say, hey, we've seen this type of thing before, here's what to expect, and setting expectations for the client, oftentimes the carrier is left to do that. And you don't want that because then it just creates a bad chain of, well, this person said this and this person gave me this advice. So collaboration between the insured and the broker is tantamount, but also collaboration between all three parties in terms of what information is being provided, clarity around the event. Don't hold anything back, because we're sitting here with our network of vendors ready to go, but we can't react if we don't have the proper information. It's usually coming from both the insured and the broker in those circumstances. So, I can't advocate any more than I have already. Get your broker involved immediately.
Thanks, Jeff. And Christine, how does proactive cyber coverage function as a safety net compared to traditional reactive policies?
Yeah, so I think our cyber coverage and our cyber policies is we provide a network of proactive services through our vendors to help our insureds, whether it be, create some type of employee training or find breach coaching available to help them better understand a risk, do vulnerability scans, tabletop exercises, things like that. That's all included in a network that we've created as a market. And I think it shows that our policy, unlike some other traditional types of policies, is not just an indemnity post-loss financial recovery type of operation. We want to work with them to best protect their enterprise ahead of time. Like Jeff had just mentioned about working with our insureds and our brokers all together to collaborate. That's how the proactive cyber coverage can also be.
I couldn't agree more with that. It's, this is a newer product, 25 years, I think we were talking about in terms of the monoline product. And, it's evolved from being defense and indemnity to this service network. And over the past, say, 10 years, the involvement of proactive vendors. So not how do we respond to a claim, but how do we better prepare our insureds? And look, not every one of our insureds needs these services. If you're a Fortune 100 company, you probably have an employee phishing program in place. But generally, these are there to make our insureds a better risk. And we're not being selfish about that. Of course, we want our insureds to present a better risk from a loss standpoint. But if we can find the right vendors and if we can find the right areas to focus on for the broader swath of our insured, we hope to improve not just the profitability of our book overall, but more so the resiliency of our insureds.
And Jeff, how should brokers think about these risk management services, and structuring layered cyber programs, and what gaps need to be addressed when clients face these complex global exposures, really?
So again, I can't advocate for a playbook here because each client is different. In general, the better our brokers structure a program to the insureds, not just operations and industry, but could be their geography, it could be their vendor platform, it could be their service platform. The better you can structure according to the actual risk itself, the more reactive that policy will be in a good way in the case of a claim. So you may have a large multinational account that wants swaths of 10, 15, 25 million limits, and that makes a lot of sense. For smaller entities, sometimes it makes sense to have 2 or 3 carriers involved within the layering process so that those who are excess can get a taste of what it would be like to be primary in case the primary has a change in risk appetite. So, these programs are structured for the year that they're bound, and these are 1-year contracts, but if structured properly, it allows you to think towards the future. You've got now multiple carriers that are innovative in whatever space and can drop down in any case or jump in the case of an issue, and you're able to lean on 3 carriers' experience versus 1. So it really is defined by the insured's needs, their operating model, and a whole bunch of other issues. So it's a really long answer to say there's no answer, but the more informed the broker is about the insured's model and operations, then the better they can design that program.
How important is alignment between cyber policies and other specialty lines like tech E&O or crime to avoid coverage disputes?
It's not done, but we've dealt with this silent cyber issue for about 15 years, which is where you saw cyber coverages present in property policies, D&O policies, FI policies, excess casualty policies. And I believe the pervading thought process there was the more you can get, the better. The challenge when you have a monoline policy versus 6 others that offer an element of coverage is that then you're operating in the gray area. While if you have the accessibility to products that aren't monoline cyber that may offer cyber coverage, okay. But I wouldn't use those in replacement of a monoline cyber policy. The monoline cyber policy is not just designed specific to that insured, but It has the vendor model, both proactive and reactive. It has the most current wording around regulatory fines and penalties, around fraudulent payments. That coverage is truly driving the innovation in the cyberspace on its own. I don't think the same can be said about ancillary cyber coverages that are offered in other lines, whether it's first or third party policies.
Yeah, just taking that a step further, we see a lot in our space where we have an insured that not only needs cyber, but they need, let's say, tech E&O. They're a tech platform. They have a cyber exposure, and they're going to have other technology exposures in E&O, or they have a crime exposure, right? And there are plenty of times where our insured's operations and their needs overlap. And it's, to Jeff's point with that gray area, having one carrier providing those coverages helps potentially fill any sort of gap or issue where, hey, where does this claim best fit? Like, what guardrails are up to make sure that coverage is appropriately designated to its, bucket, if you will, and how that claim is and should be handled. If you have two different carriers with that, it can get hard. So having a carrier approach multiple lines of coverage together it's great. It's not necessary. It's not required by any means, but it's very helpful in the event of a claim. I think the first example that always comes to my mind is social engineering coverage. It is offered on a fidelity crime policy, and then cyber policies will also offer it on a sublimit basis. So you have a potential gray area in the event of a claim that could trigger both or either or none, God forbid, but having an experienced in-house claims team, like we have here at Westfield as an example, is your best solution to make sure that coverage is most appropriately provided where it needs to be.
I couldn't agree more with Christine. Nobody wants to run a marathon in flip-flops. You have to find the coverage, that keystone coverage that you're trying to obtain to protect your company, to serve as that main focal point. You can't just rely on ancillary policies and other things and cross your fingers and hope that it works out. We've seen a history of litigation around that where cyber claims are put into property policies, excess casualty policies. And while in some cases that may have worked out well for the client, it's not every case. Whereas a standard monoline approach is there for a specific risk. We price it based off of the exposure there and can provide the appropriate coverage for it.
Thanks, Jeff. I really liked your analogy. Moving on to trends. What trends are you seeing in underwriting cyber risk? Tighter terms, higher retentions, more emphasis on security controls?
An underwriting trend that we're seeing is just, it's a continued, but I would say an increasing reliance upon third-party data to accentuate our underwriting approach. We ask a lot of questions in applications. If we're lucky, we get to talk directly with clients or do a meeting with them. But the data we get from third-party vendors, whether it's an external scan or what have you, has become such a benefit to us because it allows us not to just at the time of your renewal see, yes, they have a patch management methodology. They are utilizing XYZ. It's a way for us to look even beyond that. What is their presence on the dark web like? What chatter is showing up here? So that's been really beneficial for underwriters because I was not a cyber underwriting major in college. I was a philosophy and history major with minors in ancient Greek and German, which sounds like a natural pathway to insurance. But what it's really allowed us to do, we are not IT experts. We study it, we look into every trend we can, but we've learned that we can't do everything on the underwriting side. We engage cyber risk engineers, we engage computer network experts, really anybody that will answer our questions. We're always asking, like, what should we be looking for? What trends should we see? So, I think that's a good thing when you can admit you don't know everything and are willing to ask for help in how you can better evaluate risk. And you're going to continue to see that over the next few years. The other trend that we're seeing in underwriting is certainly a more stable market. We're exiting the hard market, which was really, say, the end of Q4 2022, early Q1 2023. And there was a period of about a year of double-digit rate decreases, which I get it. If you're an insured, that's amazing. It's a bragging right. You want to see those costs come down after that major escalation. But with stabilization, that means there's less volatility in predicting your terms year over year. You don't want to have to continually chase big decreases that would mandate you switch carriers who may have a change in appetite and not be or want to be part of your risk the next year. So that stabilization allows you to work with your carrier of choice and frankly play a long game with them, which is what you want. You want somebody that's there that knows your company. And I think the stabilizing market is helping aid those kind of broader carrier, broker, insured relationships.
How do you see the demand for integrated cyber solutions evolving over the next 5 years? Christine?
I think our insureds, they are and they want to be more involved and they want to be more proactive. Like we've mentioned before, we've created a vast network of vendor services. And with that comes a lot of things for our insureds to use to help create more preparedness, more resiliency. How can they better protect their enterprise and their operations pre-claim? And I think that in the next 5 years, even hopefully sooner, we're going to see more insureds wanting to be involved more ahead of time and wanting to share that with us and the brokers and the vendor networks to help create a more holistic approach to their preparedness and their proactiveness towards an event that likely will happen. It's not if, it's when. And I think that we're going to continue to see the involvement and the eagerness of our insureds and the solutions, I think, evolving from the vendor and the carrier side as well.
And are there specific industries where proactive cyber coverage has, I don't know, become more essential due to heightened exposure?
All of them. But I will say we generally saw certain industries buy cyber insurance and many other industries said, why do we need that? We would never need that coverage because we don't hold anybody's data. Like I said earlier, most large cyber claims stemmed from privacy breaches because they held a lot of people's information. There was a lot of data. It was very valuable. It was highly sensitive, and the bad actors could make a lot of money off of it. So industries like manufacturing or supply chain or the energy industry, oil and gas, they were like, why would we need this? Because we don't hold anything. We have like our employee's identification number, and that's the most sensitive thing on our network. So historically, you could argue it was more important for these entities that were experiencing those larger claims. Well, fast forward, and claims events and circumstances and events have shown that it's not the case anymore. You are now seeing entities that are, almost critical infrastructure or manufacturing and anything involved in a supply chain being vastly affected by large cyber events. And so it's not that it's better or different or worse. It's just, it's different for different exposures and different reasons, right? A manufacturer is not likely not going to have a lot of costs incurred due to a privacy breach, but they sure are because of a business interruption.
Well, it's interesting, right? Like the script is flipped a little bit. Yeah. So the first 5-10 years of selling this coverage, we were trying to convince people like, this is why you need it so badly. Yeah. And now we're at a point where our insured say like, well, we really don't have an exposure. It's like, why? I'd love to hear why you don't think you have an exposure, because the claim, this isn't just the theft of PII anymore. It could be the shutdown of a dairy farm. It could be the, work stoppage on a construction site because all the drones have failed because they've been hacked. The script is really flipped in a good way, though, because it's easier to explain the insurance, and a bad way because of the over-reliance upon IT that we all have. And it's really hard to imagine, unless you're a notary with a stamp, most of what you're doing has some element of technology associated with it. We have this really fun, it's not even an analogy, it's just an example we use with our underwriters, which is when we're trying to figure out whether something's a technology service or a professional service. It's like, well, do you use technology to perform your professional service, or is technology a professional service? And when it comes to cyber, the question really becomes even more like, how don't you use the internet or power or something to run your system? And we really haven't gotten we don't have any exposure in quite a bit.
I think connectivity is a good word for that too. Yeah. Like explain how your enterprise, your operations as an insured are not connected to something, whether it be a technology service, a database, a infrastructure of some sort, because that answers the question.
If I could jump in, like to give a different answer to, what we see in 5 years, I mean, I hate to overuse this word, even though we hear it every day, but artificial intelligence and Gen AI is truly complicating not just how we underwrite, but how we view risk. So, there's a little bit of, I believe it's called AI washing, where you're saying you're using AI for XYZ, but really you're using it for your first level help desk type stuff. So that's on the job of the underwriters to figure out. But more so, the reliance upon AI and the underlying models, which a lot of these technologies and services are built on, is becoming incredibly complex. If you get annoyed by your iPhone having to update every month and a half, 2 months, when an AI model's updating itself, you can get a totally different ballgame. You just have no idea what the outputs are going to be. You can assume what they are, but the faster the technology and AI adoption moves, I think the faster the cyber risk evolves. We've seen it with AI deepfake videos of, your CEO asking for you to submit $1 million payment for XYZ or collect gift cards. Like, these things are wild. And so it's truly complicating the underwriting, but also just the overall exposure, because it's very difficult to delve into what's actually being done, how's it being used. So I think that's going to continue to be an issue over the next 5 years.
If you had to leave the listeners with one key takeaway about proactive cyber coverage, what would it be?
Mine would be, don't be static, right? This whole conversation, everything we've talked about, is how the cyber market is and can be very volatile. And the landscape is changing every day. The threat actors change every day. So proactive cyber insurance has so much built into it that help you and help our insureds best prepare, whether it be through resiliency models and any sort of tabletop exercises, whatever you can do to better and improve your security framework and your organization will help you adapt in the event that this and when our cyber market just continues to change, almost what feels like by the day. You will be better prepared to withstand any drastic changes in our market or the claims events, right? There could be new types of attack vectors or threat actors out there that, like we've said earlier, we don't know that they exist yet. They're probably out there, and they could have a new way into a network. And a new ransomware group could pop up tomorrow, for all we know. And being nimble and ready to either adapt or change how you're going to respond, what you need to look out for in your organization, how you're going to detect if something's wrong, constantly being on the ready for that will be paramount in how you have your proactiveness within your organization.
Jeff, anything to add?
Trust the process, both on the claims and the underwriting side. When it comes to the claim side, we're building these vendor networks, which don't just include technology vendors. It's legal vendors that specialize in law firms that specialize in regulatory law and response. It's forensics investigators. We do a lot of research, as do our brokers, in making sure that we're trusting these vendors and the right vendors with our clients. We're not trying to find the lowest cost vendor out there to improve our balance sheet. That's just not a fact. We're trying to find those that are the most effective in getting our clients either back up and running as quickly as possible or guiding them through the ransomware payments or negotiation or forensics process to just get our clients out of that. This is a process that's taken 25 years to build. And is it perfect? No. But is it getting better? And is it not serving 95% of our clients as well as they can? Yes. We get a lot of questions about, can I use this forensics vendor? He's my neighbor. He walks my dog sometimes. It's like, no, they're not a trusted vendor. We get it. There's someone you want to help out, but this is what's best for your company. And so trust the claims process. And I would say on the underwriting side, you're getting a lot more questions. If you're an insured, you're getting a lot more questions from us around what your operational controls are. How are you utilizing AI and so on and so forth. We're not just trying to take up oxygen. We are trying to find a way to better our underwriting models with every single client meeting and every single client application that we review. And so this information is mandatory, and it's needed to keep that market of cyber risk sustainable. Without the right data and without the right information needed to make proper underwriting decisions, you're going to have way too much flexibility and fluctuation in the market, which is never going to be to the benefit of our insureds.
So trust the process, back to what Christine was saying, be ready, stay diligent, stay focused on it, and try to get ahead a little bit, I guess.
Yep.
Yeah. Christine and Jeff, thank you so much for spending time with me today. What an interesting conversation.
Thank you.
Thank you.
Thank you for listening today. To watch or listen to all of our episodes, download Beyond the Risk wherever you get your podcasts. I'm April Brackett. Thanks for listening.